Welcome, Jimmy, to Between Two Fiduciaries.
Well, tax season has officially started, Jeremy. Yesterday was, this is the 28th that we're filming this.
Yep.
And yesterday, the 27th, was the first day the IRS was accepting tax returns for the 2024 tax season.
Fantastic. Here we are. I mean, it's always a good season. People can get their taxes done and get their returns, hopefully, and move on.
That's the hope.
So, one of the things we're talking about here with taxes is this concern around, will I get audited?
Right.
What does that look like? And why do people get audited?
Yeah.
So we're going to dive into that and explore it. So simply put, why would one get audited by the IRS? I mean, we have 5 different things here.
Yeah.
You could put 15 different things on this page.
Sure.
But there's some things that bubble to the top.
Right. I know we're going to get to this on the next slide, but there's different levels of audits, right? So as far as like the correspondence are the most, mailing correspondence back and forth with the IRS is the most frequent form of audit that we see, which is typically, you forgot about a 1099 that you received and you didn't provide it to your tax preparer, or if you prepare it yourself, you forgot about it. It might have been a 1099 from interest earned in your checking and savings account. It could have been about an investment account that you forgot that there were taxable dividends and interest or capital gains. And those are the easiest for the IRS because those 1099s are reported to them. It's very easy for the computer to track.
Yeah.
Hey, we got a 1099 from your bank, but we don't see that reported on your tax return. So those are very simple, straightforward. I'll tell you that the number one thing that you learn in schooling for this is that the thing that they're most looking for is unreported income.
Okay.
Right. So, we look at the, point 3 here, you have higher than average deductions, losses, or credits. Yes, that is something that catches their eye when relative to your income, that your losses or your deductions are higher than average. That certainly will catch your attention. But underreporting or not reporting income is viewed as like the most severe and serious thing that you could be audited for.
Yes.
High earners obviously are more likely to have more extensive levels of audit because if they're going to, spend time and invest an IRS agent's time to go out and actually audit you, if they're going to find 1% more of tax revenue from you, they want to get it from somebody who has a lot of income so that it justifies the cost of an agent going out to meet with the taxpayer.
Naturally.
But again, I think that I think most people operate in this zone of, a level of fear that if I do it this way, will I get audited? And again, there's, you try to be reasonable is typically what the IRS asks for with areas that are not cut and dry, like reporting your W-2 wages or income from Social Security or income from an IRA or an annuity or something like that. But things outside of that, they're looking for reasonability.
Yeah.
And if you're being reasonable about what expenses you incurred and how can you, having receipts to prove it, then you're usually in good shape.
Things that I would point out here is there's going to be different filters that they apply to. Do you run your own business?
Right.
That's going to be a filter that they look at and scrutinize a little bit heavier than somebody who's just simply a W-2 employee. Oh, are you a high earner? Well, what is a high earner?
Right.
But I think generally speaking, they start to really look heavier at people who have household income of $100,000 and above. Don't quote me on that, but
Right.
I've seen that before. And then last point here is if you take an early payout from something like an IRA or a 401k, this is some of the basics of tax code, but
Right.
You're going to get hit with both taxes, that is a taxable event.
Right.
If it's a distribution.
Right.
And also a penalty event.
Correct.
Of 10%.
Correct.
So just something to be aware of. I mean, that's something we preach with our clients all the time is that, look, those are a long-term account.
Right.
If you're gonna separate from your employment and you have a 401k, roll it over into an IRA, do it through a custodial to custodial direct transition.
Right.
A rollover.
Yes.
Direct rollover. Okay. So what next? Let's say you're one of the unlucky ones. You get audited. You mention this. look, there's different types of audits, the most common being the correspondence. And then let's go back to the other two there. There's the office audit and the field audit.
Right. So fortunately, I've never had a client whose return I've prepared ever have to go through number 2 or number 3 with the office audit or the field audit. However, I have experience in the past at a previous employer that the owner of the firm did have a field audit where an agent from the IRS did come and spent a week's worth of time in our office in the conference room auditing the owner of the firm. So to your point before, business owner, much more likely to be scrutinized.
Yep.
And so that is more invasive, but it typically finds again, high earners running a business. You had 2 of the conditions that we had listed on the prior page. But again, the most common one that we see are the correspondence audits. And I've never had a client that's actually had to bring tax records to an IRS office as of this point, and hope to continue to maintain that record. But again, different levels here. The field audit is where they're really looking to justify the cost, and it kind of depends. The stories that I have heard from talking with other CPAs here locally and nationally. Each auditor is different. Yes, they work for the same organization. They all work for the IRS, but their level of scrutinization can be a little bit different from one auditor to the next. So obviously, it's something that we want to avoid at all costs.
For sure. And here's the thing. One of the things we really want people to understand is that whether it's a correspondence audit, an office, or a field audit, look, an audit doesn't mean you're guilty of anything.
Correct.
You have rights. Yep. You have an opportunity to state your case. There are channels through which you can work. If you need representation, the appropriate ones are CPAs, enrolled agents, which is a federally designated program. It's not a CPA, but it actually is the only other group than a CPA and an attorney that can represent a person in tax court.
Right.
So these are the 3 professional groups that you can lean into if you need help. There's also something called the Taxpayer Advocate Service. That's a U.S. government funded group that provides a lot of resources, good resources in there for all things tax related, in fact, but in particular, you can get some help there when it comes to audits and question around, like, how am I getting this audit? Is this a scam? Is this real?
Right.
And that's another point that we'd like to make, is that there's a lot of scammers out there, so be careful.
Right.
And lastly, you can appeal. Like we were saying, that there's usually a protest letter that you can submit within 30 days. You could even take your case to U.S. Tax Court of Federal Claims, or a district court as well.
Right.
All right, so by the numbers, it's not all that common that people get audited.
Right.
1 in 500 is about the trend. Talking about less than a 1%. And I found this interesting from the Congressional Research Service, is that by income, who is getting audited? And clearly you can see as the chart moves to the right there, with higher incomes, there's greater scrutiny.
Right.
Yeah, I mean, so it is what it is. This is an enormous task for the IRS to undertake when you've got tens of millions of returns coming back to them in a short period of time. They have to put filters on it. They have to look at it through a very distinctive lens.
For sure.
They've got to do their job. But as we know, this is also a political football.
Yeah, it's, again, we were talking about this, off camera before, but there was all this news in the last year or so under the Biden administration that there were going to be 87,000 additional IRS agents, in the hopes of, because we have been running a budget deficit, and we have a large debt bill in the U.S. right now. Well, what's one way to help reduce that debt? Was to go find more tax revenue of those out there, those taxpayers who maybe have been taking home a little bit more than what they should have. And however, now with the current administration, there's this sort of like a current freeze on hiring federal employees and maybe fewer audits. who knows, right? Like we're still so fresh and new into this new administration. It's yet to be seen of how the IRS is going to be able to carry out audits. How many staff members do they have that they can, reasonably carry out the audits required to go after those that are, most likely to owe a little bit more money.
That's right.
So 1 in 500 has been the number historically. Who knows if that's how the trend continues forward or not?
Yeah, it'll be interesting to see if that stands up. But at the end of the day, it is a low percentage, and you do have rights. Don't get too worked up if you do get like a correspondence audit.
Right.
It is, just not that big a deal in most cases.
Right.
If you need help, like we said, lean into a CPA, an enrolled agent, or a tax attorney. Get some help. Fight your case if it's worth fighting.
Right.
If it's not worth fighting, go ahead and pay the bill.
Right.
And move forward.
Yes.
All right, that's it, folks. It was really great talking to you. Again, it's tax season.
It's tax season. We're officially underway.
Get after it. Thank you.